So welcome back to another webinar. Last week we didn't have a webinar because I was a little busy with my obligations at school and also the launch of a new course, the technical analysis course that we had. I hope you guys are having a good week so far, weekend at least, and kind of recuperating from a crazy rush in the markets. I just wanted to give you guys a couple of updates. And this week we have, the themes of the market still continuing. Just want to point out a couple of things from last week, which were important, which is import prices, which were mainly, looked at, or we are actually going to look at import prices this coming few periods, because as I was mentioning, the cost of doing things is starting to go up. And when the cost of doing things starts to go up, it's going to put on a lot of pressure on suppliers and consumers. And that's also one of the reasons and contributions for inflation, which will continue to rattle the market. So the Fed's dot plot for rate increase have also been pushed forward, which is another reason why the markets are a little jittery. The Fed first rate hike is now priced in by Q1 of 2023. So that's what we're looking at now, 2 years away or so. Q1, which is now, just ended, right? And so market's starting to price in the fact that, the valuations are going to come down. That's the reason why you see a broader market sell-off on Nasdaq, which has not recovered yet, right? But then you can see the complete difference on the S&P 500 futures here, which have recovered to a pretty large degree. So this week in review, we are expecting a possible push up on the S&P 500 and the Dow Jones continued with the momentum to the upside. There was a whole bunch of inflows and outflows on Friday, followed by a big push of buyers that came to the market right at the market close. We don't know if this is going to be bullish or bearish. By right now, where we are in terms of futures, the technicals do point to a possible extension to the upside to test the 100 fib level retracement, full retracement back again to the top to create another double top over here. There's a possibility that we will get that. We had a very strong rejection on the 3842 levels on the S&P 500. And so this looks like a solid support right now. As you can see, this is a pretty solid level of demand over here. So this level right here, very solid level of demand. And the demand will continue as long as we dip into this region. We could alternatively, we could also be trading sideways for a while, which will put this market in a pause until economic numbers are projected to be a bit better. Now, I already have mentioned this before that the Fed is expecting a 6% GDP growth this year, which is it's a very large number for GDP in terms of the US because we have an average of 3%, which just means we're going to grow at double pace. But remember that we had a deceleration last year. So this is the economy catching up to where it was supposed to be, especially with pent-up demand and, travel starting to increase. You can see American Airlines has already projected that they have sold more seats on leisure travel, I think to the tune of almost 1 million seats during this period. And I think through summer, they're expecting even bigger increase. So lots of people want to travel for leisure and want to get out, go to different places. And I don't think international travel will kick off anytime soon. But I think domestic travel within the US should be pretty strong, which will create economic activity and should put a good projection on our economy. The other thing that we really need to watch for in terms of the signs will be this week. We have the economic calendar, so this week things to watch out for. And I can guarantee that this week's going to be another rough trading week because we have non-farm payrolls and unemployment rate on Friday. So we may, and because Friday is also a holiday, so it's going to be a rather short week. So expect all of the market activity to be covered within Monday to Thursday. And so you're going to see you will see a lot of trading activity happen, especially on, your Wednesday and Thursday more than likely, because you have initial jobless claims on Thursday, and then the initial jobless claims usually lead into non-farm payrolls the next day, which gives you a good indication of how the economy is following. The unemployment rate is what we're really going to be looking at. So this is something that will be completely actionable. I recommend trading lightly this week. Don't take positions that you don't absolutely don't have to. Okay. Um, I think honestly, this is a great week to pick up positions, and I'm gonna about to go through the opportunities now. So just to wrap up the projections here with SPY and with Nasdaq, I see a possible upside retest to the all-time high here, and then a possible retracement back down either to the 78 or the 61.8 right here into these two regions for another retest before we move to the upside again. So this should be the two regions that we get our wave down, wave up. Since we had a big wave up already, this may complete the wave. If we don't complete the wave, we're going to come back down here to retest this level again, the 50, to kind of find a support here before moving up to the upside to test the high over here. So the one thing's for sure is we're in a wave up right now, and we have to try and continue to ride the market trend, which doesn't mean that you go bullish just yet, but I would say wait for this waves to play out. And if we find support back here at the 39.20, which is where my line is drawn right here, the 39.20, which is the 61.8 fib, this is the level at which we can start to consolidate entries into positions to the upside. If we do fall below this and we start to test the 50 or the 38.2, that means we're going to go for an extension back down into the 38.40s, and we may continue in this pattern for a while. Okay, so that's really going to be what to watch this week. We want to see the bulls capture the upside here, technicals wise. We want to see consolidation above the 38.20, sorry, the 39.20s right here, and stay above the 39.20s to capture the upside into all-time high from here. Okay. With Nasdaq, the story is a little different. With Nasdaq, you can see the futures in Nasdaq are still looking slightly bearish. They're still looking slightly bearish. In fact, we're in a very long descending kind of a channel here. If you can see this, right? And we may see another flush on the Nasdaq to the downside, which might pull the S&P 500 down once again. The Dow, on the other hand, looks very nicely set up for a possible run. So we may continue to see the Dow with good upside pressure. You can see we're almost breaking out here again, once again, as investors still kind of rotate into the value stocks rather than the growth names, which is what Nasdaq's primarily made out of, right? This is the innovative sector of the market. And so the trajectory still remains very focused on buying safe companies, good producing, good cash flow producing companies that are going to return nominal yields and will have a decent hedge against inflation. Okay, that's the focus here. With Nasdaq, we can possibly see if we get another bounce. This is the major level here, 12,751. This is a major bounce. If we don't bounce on this level, we will possibly see the bears recapture the downside, which is the 12,600s here. And that will be a little nasty because then that opens up all kinds of projections to the downside further. Remember one thing, we do have a gap on the QQQ here, which is the same. So, I mean, you're looking at QQQ and NASDAQ, whatever, right? It's a similar thing. We have a gap at the 302s that we need to close. This gap is a very annoying gap, and I think that we may be heading to close that gap. We were in a bullish ascending pennant, and now we broke below it. If we can't hold this level by tomorrow, if we can't go back into this channel, then we're going to come down to try and attempt and close this gap. That is what I see with the NASDAQ, and that will possibly put pressure on the S&P 500 to not be able to climb up to close this gap as well. So the pressure will keep the S&P 500 at the 39,200 level versus the NASDAQ trying to close that gap. And then once we close that gap on QQQ, then it seems to me like all systems are clear for us to extend to the upside and go. The bulls will more than likely be taking control back of this market to extend to the upside here on the NASDAQ. So I'm looking for a mid-April rally in tech once again, maybe the third week, the second to the third week. Now, why? It's pretty simple. Earnings season is going to start around that time as well. So if you look, we have April 12th, the week of April 12th is when earnings season is going to start. And so, the market's kind of pivoting into this structure where we'll have one last wave down before we get the final, eye of the tiger move to the upside, right? And obviously tech companies are going to continue to outperform the market as, good lockdowns were still during this past quarter, right? It's not like we opened up considerably everywhere. Yeah, vaccines were being handed out, blah, 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 blah. But remember, guidance from great companies should continue to be great because they're great companies, right? I don't expect, companies like Apple and Microsoft and Amazon to underperform. I expect them to perform the same, if not better, and continue to hold strong cash positions, great balance sheets. And those are the kinds of businesses that you really want to be buying. Okay, so in terms of what to buy, how to buy, I've put majority of my portfolio positions into the Discord channel. You have access to them. You can go have a look at them. I don't want to take up too much of your time on this recording. And so you can go look at the long-term channel and you'll find my projections for what stocks I'm owning right now in this climate. If you realize I have a good mix between tech, Chinese tech, and growth, and then also some value stocks. And so I'm holding a very diversified mix right now. Okay. All right. Now, the next thing that I want to talk about, and I think, this topic of this webinar should be focused on opportunities in the Chinese market. So I think maybe the title should be something like, irrational exuberance in Chinese tech, because that's what the focus is this week or the past week. And I think if you're not looking at that, you're missing out on a very big once in a lifetime opportunity. Okay. So you guys know how I keep talking about KWeb, how I keep talking about Chinese tech, how I keep talking about the China markets themselves, how they are great companies in this specific market. I'm looking at KWeb here because it's the Chinese ETF for tech companies. And this has, a majority of really great businesses that produce solid cash flow. Now, I know there's a lot of, talk about how tech in China is very this and very that, and you can't trust them, and you can't do this, and you can't do that. All completely fine. It's based on your own speculation, your own trust in them and whatnot. For me, I'm just an investor looking at good businesses that have great economic moats in an economy that's about to grow massively in the next few years. This is a great entry point for people who had missed the boat on KWeb. And I think that if you don't take advantage of this opportunity right here to get in, this will be a lost opportunity of a decade, because the Chinese stock market is a very, very relatively new stock market. Okay, you can see that it's a very, very new stock market. It only started sometime in 2013, and since then has delivered a pretty sizable return. Okay, we started at 29. We're already at 300% now. Okay, over a period of just less than, I want to say less than 10 years, right? 300% less than 10 years. And this market's going to continue to grow. It's going to continue to outpace the US market because of the innovation and technology that Chinese tech are putting into the businesses. They used to be copycats, and now they are world leaders in what they do. They consolidate technology and they build it out. Of course, there is the argument about how the government regulates them. But remember something, that those are short-term arguments that the government intentionally does to correct the overheating markets. So when that happens and it gives you an opportunity like this, you should take that with open arms. When nobody wants these indexes and everybody is selling it off, this is where you should step in, be greedy, and start taking positions in this market. Okay. If you want to also get exposure to mainland China stocks, which are not just tech, you can also go for ASHR. This is another one. This includes all of Chinese companies that are mainland. So the banks and oil companies, etc., etc. Those are the things you can concentrate. Alternatively, if you don't like buying them as a ETF, you could also buy individual stocks. Right? Last week, Baidu came down to 175 for a brief moment, and then went straight up to 208 within the same session. This stock was oversold. I managed to get in at 180 plus for some of my shares. This was a great sale, flash sale. And when these flash sales occur, you need to take them at open arms. Baba as well, Alibaba. These are great companies, by the way. Okay. Baba's trading multi-year lows. And now this is an opportunity once again to get in before we see a next wave up in the bull market. Once the risk comes back in tech, all of these companies are going to go back up. Okay. Their intrinsic valuation of Baba is $347 in terms of per share. We are way, way undervalued right now. This is a great time to be adding positions here, right? With Baidu, what was our intrinsic valuation? We had almost a $282 intrinsic valuation, trading at 200, also fair, way below the fair valuation, right? So I think the main topic of discussion you should be looking at, instead of just thinking about US tech, US tech, US tech, look at other markets, look at emerging markets, right? China is one of them. And yeah, the Nasdaq is down right now, but the Nasdaq will not be down forever, right? We will get the rotation eventually. And so when people are selling in fear, you should be running in to grabbing all of these great companies that are trading at massive discounts and riding the next bull wave up in innovation, right? The art fund is also at a very attractive buy point right here, right? If you believe in innovation and all of those, you should be also taking some positions in this one, right? If you want exposure to growth, you want exposure to Tesla. Like for me, I don't want to own Tesla, but I buy the art fund so that I have some exposure on Tesla, right? It's 10% of this fund, right? So there are many ways you can go about doing this. The main focus this week is try to stay, as uh, mobile as possible with your trades, be nimble, get in, get out quickly. It's going to be another, I can guarantee you it's going to be another challenging week. It will be challenging until we have the confidence of the market back that things are going okay. The market's like a it's like putting a key into a lock. Like all of the grooves have to meet before the lock opens up. And so right now it's kind of like the key is halfway stuck in the lock and it hasn't met all the grooves yet. And so the alignment for the lock is not open, and therefore we haven't got the rally that we deserve yet. But remember that these depressions, they don't really last for a very, very long time, right? At most, you can see the average depression lasts for about a month, right? And so we are coming to that period already, right? We're coming to that period. We have a few more days left, right? And so I say, April is probably the month where we get a push on the Nasdaq back up to the not pushed back to all-time high, but at least we'll get a push up back to three quarters the way. And when that happens, watch for the Dow to correct back down, because money will flow out of value back into tech, and that's just how the rotation goes, right? So yeah, okay, that's it. I will end the webinar here. Thank you for watching. We'll be covering Palantir as the ticker of the week this week. I appreciate you guys tuning in, and we'll see you at the live stream this evening, your morning. So I will see you then. Bye-bye.